in the crypto market when it comes to Bitcoin's price action, there tend to be some recurring tendencies across cycles. It's not just where bear market bottoms occur before the halving and bull market peaks occur after the halving, but it's also the reaccumulation phases that precede parabolic upside into a new bull market peak and new all-time highs. So we'll be talking about those phases in a lot of detail. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, then let's dive right into it. So when it comes to the halving event, these blue vertical lines, these represent a fundamental shift in the Bitcoin protocol, and they represent also a valuable reference point when it comes to bear market bottoms and bull market peaks. So when it comes to bear market bottoms, you can see here in the 2016-2015 cycle, 550 days before the halving is where we actually bottomed in the cycle, and then ultimately after the halving we saw a mirror effect whereby we saw 518 days after the halving. That's when a bull market peak occurred. So just notice how it's almost copy paste in that regard. 550 days before the halving is where the bear market bottom occurred, and then 518 days, just 30 days removed, is where the bull market peak occurred. And it's not just when it comes to 2015 and 2016. This was also the case in this cycle as well. 517 days before the halving we saw the bear market bottom, and then 550 days after the halving, so a month later, we saw the bull market peak occur. And so if this continues, this sort of historical cyclicality and copy paste situation that we have going on here, if that's going to continue and we saw a bear market bottom 517 days before the halving occur, then we could see 518 days after the halving. That's where we could see a bull market peak, or 550 days, so a month extra. And so if we look at what's been in the past, so if we saw a bear market bottom occur 517 days before the halving, then we tend to see a slightly longer, there's an extension by a month here, so 550 days. And so on the other hand, if we get a 550-day moment before the halving and the bear market bottom occurs 550 days, then 518 days after the halving is where we have a bull market peak. So in this regard, the key thing to mention is that we're probably going to see a repeat of 2020, because 517 days before the halving is where we got a bear market bottom in that cycle and also in this cycle. So as a result, that's going to mean that we're probably going to see a bull market peak occur 550 days after the halving. And so if that translates here as well, then that would mean that we would peak in October, mid-October 2025. So when it comes to these copy-paste scenarios, that cyclicality is pretty phenomenal. It just showcases to us that every bull cycle lasts over 1,000 days. So we have a 1,000-day cycle in every cycle, essentially. It's the bear market bottoming out period, the initial rally to new highs, and then the parabolic phase in the cycle to bull market peaks that we haven't ever seen before, so new all-time highs. So that sort of cycle lasts 1,000 days. So if we're thinking about the halving in terms of 500 days before is a bear market bottom and 500 days roughly is a bull market peak, we have to understand that around the halving is also a valuable period in the cycle as well, and this tends to be the reaccumulation phase. So we tend to see pre-halving rallies before the halving, and then halving retraces, and then sideways price action. So a post-halving reaccumulation phase tends to occur, and it's this reaccumulation phase that prepares price for the parabolic phase in the cycle to new all-time highs. And it's the same thing in every cycle. Pre-halving rally just before the halving, and that's really important because just before the halving is where we tend to see that buy the hype, sell the news effect, where people buy into the market anticipating for the halving to enable fantastic profit. But the thing is that there's a lot of disillusionment after the halving, because people were buying into this halving event thinking that they were going to profit rather quickly. But the fact of the matter is that it takes many months for the halving catalyst to play out into price. So these short-term traders, they tend to get shaken out due to disappointment, disillusionment, and impatience in the immediate weeks and months after the halving. But if they were to actually hold for a few months longer, then they'd be able to realize those fantastic gains and that fantastic profit potential that inevitably the halving impacts. So we're once again in a reaccumulation phase in and around the halving event. Prior to the halving, we saw that pre-halving rally around the halving event, we saw that pre-halving retrace, and that took place over a period of months, in fact. But generally speaking, this has been a reaccumulation phase whereby price moved sideways for a lot of the time. But this is going to be preparing price for a parabolic phase in the cycle, because at some point we break old all-time highs and break into that parabolic phase of the cycle. This has been the case in previous cycles in the past. So we've seen that happen in the 2017 cycle, also in the 2021 cycle, and that's going to be the case also in this cycle as well. Of course, we broke to new all-time highs in the pre-halving period for the first time ever in this cycle, but we're going to break to new all-time highs also after the halving very shortly in the future, and that's going to enable really parabolic upside. So if we're going to look at parabolic upside right over here, we can easily measure that upside. And it's really important to note that we tend to see diminishing returns with every parabolic phase in the cycle. So breaking beyond new all-time highs, that's slightly going to be smaller than the previous upside that we saw. So if we compare this amount, so that's how much we rallied beyond new all-time highs in the 2016-2017 cycle. Here, well, we only rallied this much, so it's already a reduction by a certain amount. And so if we see the same thing happen here, then once again we get a reduction. Does that get us into over 100k, 120k, 130, 140? We have to understand that there's going to be a diminishing return. However, from here, that's still going to be a really decent return. So diminishing returns do occur after the halving in each cycle. The parabolic phase is still going to be parabolic, but nonetheless it's going to be diminished in returns, but it's likely still going to follow this 500-day period after the halving. And so if we think about 500 days after the halving, that whole rally takes us to new all-time highs. Actual parabolic phase in the cycle beyond old all-time highs, that's even a fraction of this. So maybe that's going to be 250 days of rallying into price discovery. Same thing over here as well. Maybe a slightly longer period. So it's still around 250 days, 250 days, 250 days and 300 days, apologies. And here as well, that's going to get us into the 250, 300 day period where we're simply rallying into price discovery, and we're pretty much on time right now. Do we see a few more weeks of sideways price action before we break into the price discovery phase? Yes, that's probably going to happen. However, in November, there is a strong case that we will be breaking out to new all-time highs and into that price discovery phase, and we're only weeks away from that. And then once we do, we'll embark on a 250-day uptrend price discovery phase. Notice that there are going to be very few dips on the way to new all-time highs and beyond. We'll get a few corrections inevitably, but just notice how the dips are few and far between. A few dips on the way up, many dips, but they're very short-lived. And in this cycle, we had very small dips in the form of these downside wicks here as well, here even as well, but we got deep corrections as well. So really important to understand that we're not just going to be rallying in vertical fashion for 250 days. We're going to get rallies and then very short-lived dips, maybe even deeper pullbacks. But really important to understand that those dips and pullbacks are going to be fantastic opportunities to be dollar cost averaging into the market before we see new all-time highs again. And it's going to be a very interesting and exciting period over these next 250 days or so. So really important to participate in it. We know that we've been consolidating for 8 months now, but that's fine because now we're going to be transitioning into a better period in the market. So I hope that the impatient, the disillusionment with profits and disappointment and discouraging of this sideways period doesn't detract you from the fact that we still have an interesting period ahead, and it's really important to participate it because it takes 4 years for us to enter this parabolic phase of the cycle. We have to wait 4 years for this sort of price potential. So it's, well, the wait's definitely going to be worth it, but we can't be shaken out before this phase occurs. We've been waiting too long for it to be shaken out at this very, very late stage before we finally transition into this phase.